Welcome back. Let's talk about NIIT Limited. The stock is up almost 12% on the back of acquiring a US-based company, Charles Consulting, for about $65 million. It's a company that provides consulting, design, implementation solutions for strategic learning programs to professional service firms. So to discuss this acquisition and a lot more, we have Sapnesh Lalla, who is the CEO and Executive Director at the company, joining in. Thanks a lot, Sapnesh, for joining in. Congratulations on this deal. The street likes it. Just wanted to understand what proportion of revenues will come in this year, and what's the outlook for additional revenue in the next year itself? Because, I mean, I'm looking at your numbers. You do about 160 odd crores in this business, $20 million that is. What is the growth rate expected from this business for you?
Let me clarify a couple of things. First, the fixed price paid for this acquisition was about $23.4 million to acquire 100% of the equity. There is an earnout that is available to the management team as well as the founders, which will be based on their annual performance. The maximum earnout is going to be approximately $41 million. So overall, the fixed value of the deal is approximately $23.4 million. Their calendar year 21 revenues were approximately $21 million. They have grown reasonably well this year and have created an Ebitda profit of over 20% in the year 2021. We expect that Ebitda to grow both in overall terms as well as Ebitda profitability, or the profit margin is likely to grow in calendar year 22 as well as going forward.
Okay. Can you just give us a sense in terms of, you did speak about the Ebitda briefly, but what are the working margins for this particular business? When will it be integrated by, and what will the blended margins look like? The reason I ask is that in any case, NIIT has, been reporting weaker margins. It was, for example, 14% in the quarter gone by. So what does this particular acquisition bring to the table in terms of margins, and what would it be on a blended basis?
Thanks. So this acquisition will become part of NIIT's corporate learning group business. The corporate learning group business has had margins in the 20+% range and has grown over the last few years at upwards of 20% year on year. The long-term view of the corporate learning group is a 20% growth, 20% margin business. This business is going to be in line with the corporate learning group business metrics. So it will be accretive from a margin perspective as well as EPS perspective. With the integration of St. Charles will become from day one. It will get fully integrated into NIIT's numbers as well as the corporate learning group's numbers. And like I pointed out, they're likely to grow at a pace that is greater than 20% year on year, and their margin is likely to be north of 20% yearly.
Okay, so for the acquisition, a growth of 20% on the top line and 20% margins is what is expected. Mr. Lalla, I wanted to understand about client integration as well. What does it do to your client profile, since it is in the corporate learning group segment? Will it bring newer clients? If yes, by how much? Or will it be repeat clients for you?
Oh, this is a very good question. Most of St. Charles Consulting Group's customers are the top management and strategy consulting companies. 12 of the top 15 strategy and management consulting companies are their customers. These companies are known to spend more than 2.5 times of what an average company spends on their L&D. So a very lucrative set of customers. This is a segment where NIIT had not penetrated fully in the past. And so most of their customers will be first-time customers for NIIT. And those customers will have an opportunity to get a stronger and a wider range of services, including the services that they get today from St. Charles. So there is an opportunity to expand the share of wallet for St. Charles customers by including NIIT services.
Right. And final question, Mr. Lalla, just wanted to understand the growth prognosis for this acquired business. I mean, between 2019 and 2021, the company grew at roughly 15 to 17% CAGR over 2 years. But this was also because of, at a time when we were suffering from the COVID pandemic. So going forward, what is the sustainable growth trajectory of this business post-COVID and the synergies that you will realize? Because 20% is the margin that the company does already. You expect it to grow further. Could you give us a sense how much it would be and what would the synergies be?
Sure, that's a great question. Like I mentioned, their customers are the large strategy and consulting management consulting companies. Those companies, as I mentioned, spend a lot on training. And as you know, the world is going through a number of different vectors of transformation. The talent is at the top of every CEO's agenda, and the top management and strategy consulting companies are helping many CEOs deal with the talent transformation problems that most CEOs are facing. By St. Charles being sort of a consultant to the consultant, specifically on talent and talent transformation related issues, it gives NIIT a great position to participate in the future of work and consult with organizations who are at the forefront. Obviously, this will be synergistic. Both, as I mentioned to you, a number of St. Charles customers could access a larger framework of services from NIIT, but the strategy and consulting services that St. Charles offers to its customers could also be offered to NIIT's over 70 customers from a managed training services perspective. And consulting has been a growing line of business for NIIT. And by bringing St. Charles's capabilities, we will be able to service our customers much better than we have been in the past. And NIIT will become the most preferred partner for our customers going forward with an expanded set of capabilities.
All right, Mr. Lalla, it was a pleasure speaking with you. Thank you so much for joining us and explaining the rationale of this new acquisition that you've made and the synergy benefits as well that you're expecting. With that, we'll slip into a short break now. We'll next